The Empowered Investor, the Life, Philosophy, and Transformative Teachings of Phil Town. Good morning and welcome. In our extensive journey through the halls of financial giants, we have studied billion-dollar fund managers, legendary traders, and theoretical pioneers. Their stories are often set on the high floors of Wall Street, involving complex strategies, immense scale, and a language of finance that can feel foreign, even intimidating. Today, we take a purposeful and inspiring turn. We shift our focus from the masters of the universe to the master of the main street. We turn to a figure whose story is not about managing other people's billions, but about empowering the individual investor, the teacher, the nurse, the engineer, the small business owner, with the tools and, more importantly, the mindset to achieve genuine financial independence. He is a bridge, a translator, taking the complex, timeless wisdom of the greats and forging it into an actionable, understandable, and profoundly effective system for everyday people. He is proof that the principles of wealth building are not secrets, but a learnable craft. His name is Phil Town. He is not a hedge fund titan gracing magazine covers, but he is a master educator, a New York Times best-selling author, and a motivational force in the world of investing. His story is a uniquely American narrative of radical reinvention. He went from being a river guide with a high school education, living on a few $1,000s a year, to a self-made multimillionaire by applying the very principles he now so passionately teaches. His philosophy is not his own original creation in an academic sense, but rather a brilliant synthesis, simplification, and practical packaging of the value investing principles of Warren Buffett and Charlie Munger, combined with a powerful framework for personal growth and rational decision-making. His career offers a masterclass in financial literacy, behavioral psychology, and the empowering, liberating belief that you do not need a Wall Street pedigree, an MBA, or a trust fund to build extraordinary wealth in the stock market. You need only a willingness to learn, the discipline to follow a system, and the courage to think for yourself. Part 1. The Making of a Teacher. From the river to the balance sheet, to understand the immense power and credibility of Phil Town's message, one must first understand his origin story. It is not a tale of privilege or early genius. It is a story of transformation, and it forms the rock-solid foundation of his empathetic connection with his audience. Phil Town did not attend an Ivy League school. He did not start his career in finance. After serving as a Green Beret in the Vietnam War, he returned home and sought a life of freedom and adventure. He became a river guide on the Colorado River, leading expeditions through the breathtaking rapids of the Grand Canyon. He was, by his own frank account, financially illiterate and adrift. He lived a simple, rugged life close to nature, but he was not building a future. He was surviving from season to season, with no savings, no assets, and a growing sense that time was passing him by. The turning point came not from a windfall, but from a moment of stark, uncomfortable self-realization. He was in his late 20s, looking at his friends beginning to build families and careers, while he owned little more than a tent and a backpack. He realized he was on a path that led to a precarious old age. In that moment, he made the single most important decision of his life. He decided to learn about money. He made a commitment to himself to become financially literate. He began devouring every book, magazine, and article he could find on investing and business. It was hard, unfamiliar work. The language of finance was like a foreign tongue. His breakthrough, his aha moment, came when he discovered the writings and the annual shareholder letters of Warren Buffett. It was a revelation that cut through the noise. The principles of value investing, buying wonderful businesses at fair or bargain prices and holding them for the long term, resonated deeply with his logical, pragmatic mind. It wasn't about gambling, chart reading, or predicting the unpredictable mood swings of the market. It was about the sane, rational process of owning pieces of excellent companies. It was about being a business owner, not a stock speculator. This philosophy made sense to him in a way that nothing else had. He began to experiment, applying these principles with the little capital he had. His first major, validating success, was an investment in a company called Goodmark Foods, the maker of Slim Jim meat snacks. He did the work. He understood the simple business selling spicy meat sticks. He saw it had a strong brand, a moat, and his analysis showed it was deeply undervalued by the market. He invested. The stock proceeded to increase tenfold. This 10-bagger experience was transformative. It was tangible, irrefutable proof that the system worked, that a regular person doing focused homework could achieve extraordinary results. He continued to invest methodically and patiently, applying the same principles to other companies. Within a few years, the former river guide living on a few $1,000s a year had become a millionaire. He had achieved financial independence not through a lucky lottery ticket or a hot tip, but through the disciplined application of a learnable, repeatable skill. This personal transformation ignited a burning new passion in him, the desire to teach. He knew in his bones that if he, a high school graduate and former river guide with no financial background, could achieve this, then anyone with the willingness to learn and the discipline to follow the rules could do the same. He started by mentoring a few friends and family. He saw their lives change. This led to informal seminars, which grew into larger workshops, and eventually to his blockbuster best-selling book, Rule E1, followed by the equally powerful Payback Time. His mission crystallized to demystify the stock market, to slay the dragons of fear and complexity, and to empower the individual investor to take confident, rational control of their financial destiny. Part 2, The Three-Legged Stool, the Core, Unshakable Philosophy. Phil Town's entire teaching framework is built on a beautifully simple, powerful metaphor, a three-legged stool. For the stool to be stable and bear weight, all three legs must be strong and present. In investing, these three legs are mindset, strategy, and time. If any one of these is weak or missing, the entire structure, your investment success will collapse. You will fall. This framework ensures a holistic approach that most investment education ignores. The first leg, the unshakable mindset. This is, in Town's view, the most important and most overlooked leg. It is the foundation. Before you ever look at a stock ticker or calculate a single number, you must cultivate the correct psychological framework. This mindset is built on several key principles, borrowed and brilliantly distilled from the wisdom of Buffett and Munger. First is the internalization of the Mr. Market, parable from Benjamin Graham. Town makes this story come alive. Mr. Bull. Market is your emotionally insane, manic, depressive business partner. He owns half of your private business and shows up at your door every single day. Some days he is euphoric, citing the sunny weather and great news, and offers to buy your share for an absurdly high price. Other days he is utterly depressed, citing wars and recessions, and offers to sell you his share for a pitifully low price. The successful investor is not swayed by Mr. Market's wild moods. They feel sorry for him. They only trade with him when it is advantageous to do so, when he is irrationally depressed and offering a fire sale price, or perhaps when he is irrationally exuberant and offering a silly price for what you own. This story teaches emotional detachment from the market's daily, meaningless volatility. Second is the principle of the circle of competence. You should only invest in businesses you understand. If you can't explain how a company makes money in one or two simple sentences, you shouldn't own it. This forces you to stay within your area of knowledge or to expand that knowledge deliberately. It keeps you away from trendy, complex biotechnology or semiconductor investments you don't comprehend, no matter how exciting the story sounds. Third is the core. Governing Rule 1 itself, don't lose money. This sounds simplistic, almost silly, but it is a profound mental shift that changes every decision. It means the primary goal of every single investment is the preservation of capital. Every potential investment is filtered through this lens. What is the realistic risk of me losing permanent capital here? This obsessive focus on the downside naturally and automatically leads to the search for a margin of safety. You stop chasing hot stocks and start hunting for safe bargains. The second leg, the actionable, step-by-step strategy. This is the how-to part of the system, the practical craft. Town has distilled the complex financial statement analysis of Buffett and Munger into 4 simple qualitative criteria, which he calls the 4 M's. A business must pass all 4 tests to be a legitimate Rule 1-1 investment candidate. 1. Meaning. This is the first and most important filter. Is this a business you understand and, importantly, care about? Does it have a product or service that you find meaningful, that makes the world a bit better? More critically, does it have a durable competitive advantage or a moat? A moat is what protects a business from its competitors, like a castle's moat protected it from invaders. It could be a powerful brand, like Coca-Cola or Disney, a legal secret, like the recipe for KFC, or a drug patent, a toll bridge function, like a utility, or Visa's payment network, or a unique ability to sell a commodity at the lowest price, like Walmart or Costco. Without a moat, a business is vulnerable and cannot be a wonderful company. 2. Moat. Once you've identified a potentially meaningful business, you must verify and deeply analyze the strength and durability of its moat. Is it widening or narrowing? A strong, wide moat allows a company to maintain high profit margins, fend off competition, and thrive for decades. You look for evidence in consistent high profit margins and high returns on capital. 3. Management. Are the leaders of the company honest, able, and aligned with you, the owner? Town teaches investors to look for management that has skin in the game, a significant personal financial stake in the company's success. They are owners, not just hired hands. You want leaders who are candid and transparent in their communication, admit mistakes, and who have a proven track record of rational capital allocation, reinvesting profits wisely into high-return projects, or returning them to shareholders via dividends and buybacks, rather than making foolish, ego-driven acquisitions. 4. Margin of safety. This is the mathematical, price-based core of value investing. It is the difference between the intrinsic value of a business and the price you pay for it. Town's great contribution is providing a simplified, teachable method for calculating this. He focuses on two key numbers, the Big Five and the sticker price. The Big Five. These are the 5-year averages for key growth metrics: return on invested capital, ROIC, book value growth, sales growth, EPS growth, and cash flow growth. A wonderful, moat-protected business will have consistently high and stable numbers across most of these. It's a test of quality. The sticker price, using the principles of discounted cash flow, but stripped of intimidating finance PhD math. Town provides a clear, step-by-step calculator to determine the intrinsic value of a company based on its historical growth rates and a conservative estimate of its future growth potential. The sticker price is this calculated intrinsic value, what the business is truly worth. The margin of safety is then built in by establishing a MOS price, which is typically 50% of the sticker price. You only buy when Mr. Market is so depressed and irrational that he is offering you this wonderful business for half of what it's worth. This huge discount is your buffer against error, bad luck, or unforeseen events. It is the secret to not losing money. The third leg, the power of time. The final leg of the stool is patience and a genuine long-term perspective. Rule S1 investing is categorically not about quick trades or quarterly earnings plays. It is about buying a wonderful business at a great price and then holding it for years, even decades, allowing the relentless magical power of compounding to work on your behalf. Town emphasizes that time is the ally of the wonderful business and the enemy of the mediocre one. You must be willing to wait with discipline for the right pitch, to wait, sometimes for years, for a wonderful business you love to go on sale at an MOS price. And then, once you own it, you must have the patience and fortitude to hold it through market dips and volatility as the business itself grows in intrinsic value over time. This leg counteracts the frenetic short-termism of the financial media. Part 3. The tools and tactics. Putting Rule 1.1 into practice. Phil Town excels at moving from theory to practice. He is a master of using modern technology to simplify the analytical process, arguing that the individual investor today has access to tools like online screeners and financial websites that were once the exclusive domain of Wall Street professionals. He advocates for using these screeners to efficiently find companies with high ROIC and consistent earnings growth, which can serve as a starting watch list for deeper research using the 4Ms. His most significant practical contribution is his emphasis on the 3 tools for making unambiguous buy and sell decisions. This removes emotion and guesswork. The sticker price, the valuation tool. As described, this is your calculated intrinsic value. You use this to know with confidence what the business is actually worth, It is your North Star. The margin of safety price, the buy trigger, this is your line in the sand. You do not buy at the sticker price. You wait patiently with your cash ready for the market price to fall to your MOS price. This discipline ensures you only ever buy at a price that provides a massive buffer. It requires incredible patience, which is why mindset is leg 81. The trailing stop, the sell discipline. This is a critical, non-negotiable risk management technique. Once you own a stock, you must have a disciplined, automatic way to sell it if the investment thesis breaks down or if Mr. Sellable. Market's manic phase gives you a gift. A trailing stop is a standing order to sell a stock if it falls a certain percentage, e.g. 15-25% from its highest closing price since you bought it. This mechanically protects your profits, locks in gains, and prevents a large paper gain from turning into a real loss. It is the systematic enforcer of Rule 1, don't lose money. It takes the emotion out of selling. Part 4, Payback Time, the evolution to a cash-based mindset. In his second book, Payback Time, Town refined and sharpened his philosophy with an even more intense focus on cash flow and a powerful concept he calls the payback time. The central idea is to think of a stock not as a flickering ticker symbol, but as a private business. When you buy the stock, you are buying the future cash flows of that business. The payback time is brilliantly simple. It is the number of years it would take for the business's cumulative free cash flow to equal your initial investment. For example, if you buy a business for $1 million and it consistently generates $200,000 in owner earnings free cash flow per year, your payback time is 5 years. Anything the business earns after that is pure profit. Town's goal is to find wonderful moat-protected businesses where the market price is so irrationally low that the implied payback time is incredibly short, say 8 years or less. After that payback period, you essentially own the business for free, and all future cash flow is gravy. This mindset forces an intense laser focus on the price you pay relative to the tangible, real cash the business generates for its owners. It cuts through all the accounting noise, Wall Street hype, and non-cash earnings metrics, bringing you back to the fundamental question, how long until I get my money back? Part 5, the enduring legacy of an empowering teacher. Phil Town's impact cannot be measured by the assets under management in a fund, because he doesn't manage one for the public. His legacy is measured in the thousands of transformed financial lives, the retirees who have security, the families who have gained options, and the individuals who have shed the fear of money. His contributions are profound and distinct. First, he is the great simplifier and democratizer. He has taken the intellectually daunting, academically dense principles of Buffett, Munger, and Graham and made them accessible, clear, and actionable for a person with no financial training. He has stripped away the intimidating jargon and created a step-by-step repeatable process that anyone with discipline and a willingness to learn can follow. He has proven that the principles of wealth building are not secret formulas reserved for the elite in pinstripe suits. They are a public library. Second, he is a master of the inner game, the mindset. Perhaps more than any other modern investing teacher, Town emphasizes that the inner battle against fear, greed, and impatience is more important than any stock pick. His focus on developing the psychology of a rational owner, on emotional detachment, on patience as a strategy, on taking 100% personal responsibility for outcomes, is what allows his students to successfully execute the strategy during market panics and bubbles. He doesn't just teach what to do, he teaches how to be the person who can do it consistently. Third, he provides a complete, integrated, closed-the-loop system. From the initial mindset work to the qualitative 4Ms analysis, to the quantitative sticker price and MOS calculations, to the tactical trailing stop exit strategy, Town provides a full-spectrum, holistic investment methodology. It guides an investor from the first spark of an idea all the way through to the discipline sale. There are no gaps, leaving no room for fear or guesswork to creep in. Fourth, he restores the concept of investing to its true, noble meaning. In a world obsessed with day trading, crypto speculation, options gambling, and get-rich-quick schemes, Town's message is a refreshing, grounding return to bedrock fundamentals. He redefines investing not as trading stocks, but as becoming a part owner of a wonderful, cash-generating business. This shift in perspective from being a speculator hoping a ticker goes up to being a business owner analyzing cash flows is the single most powerful and liberating mental shift an investor can make. It changes everything. In conclusion, Phil Town is more than an investor or an author. He is a liberator and an evangelist for self-reliance. He represents the empowering, hopeful idea that financial freedom is not a matter of luck, background, or mysterious genius. It is an attainable skill, a craft built on timeless principles, a disciplined mindset, and a systematic process. His own life is the ultimate living testament to his teachings, the most compelling case study he could ever offer. He is the river guide who learned to navigate the turbulent, unpredictable waters of the stock market and who has now dedicated his life to charting a clear, safe course for others. In a world of financial confusion, dependency, and noise, Phil Town's voice rings out with clarity, conviction, and hope. He reminds us that the power to build a secure, prosperous, and free future lies not in the hands of Wall Street gurus, but in our own hands, our own minds, and our own willingness to learn and follow a few simple, powerful, time-tested rules. That is a gift of incalculable value. Thank you.